Oh, good morning, David. Good afternoon. David here with his weekly week look. Today is January the 4th, 2012. Happy New Year. And as usual, we're looking at November UK wheat chart 2012 new crop. And as you see here from my last video, I put that if we saw a breakout of the resistance 142, we could see an up move. This took place over the last 2 weeks over Christmas, and we saw quite an up move take place. Now the question is this an up move that will continue, or is this a temporary move against a downward sloping trend? If we just quickly go through, we've got the daily bar chart in front of us. Obviously we had the high here 172 in June of this year, and we saw the low here of 136 touch once end of November, then the second week in December. And we've seen the rise up here to test and break through resistance here at 150. Now on here I've drawn Fibonacci lines, and the 50% retracement here comes in at 154. Our 200-day moving average here, big green line, comes in at 151, and our 10 and 30-day moving average here are the blue and the red line. My feeling is that until we see a contained hold over this 200-day moving average, we still could see some further downwards pressure, and this could just be seen as a blip upwards and could be seen as a selling opportunity into the strength in the market at the moment. My idea's changed that if we break this 200-day moving average green line with either the 10 and 30, then obviously we are looking at a serious break of the downward trend since of June of last year, and we could resume our upward move. I've also marked on here gaps that we've left behind over the last 3 months. You can see that we've still got this gap up here at 170, which sometime over the next year or 2 years we will revisit. But on the downside, this upward move over the last 2 weeks did leave a gap down here at 144 and below it 140. So I feel that that we could have a sort of backfill action where we come down and fill these gaps at 144 and 140, and then the market would see whether it's got legs to go up and break through and hold a break of this 200-day moving average at 150. So I think we need to carefully watch this sort of 150 level here and see what happens now. And I'll just bring across a long-term view of this market at the present moment. Now this is a monthly chart of the UK wheat back from 1983 to the current month. And if you run a Fibonacci over the high to the low, taking out this spike here, the high I've got here is 221, and the low I've got down here 59, which was in 03, and the 50% level comes in at £140 a tonne. And you can see what significant this holds, and you can see that just recently on the continuation chart we've come down to test this level and obviously now bounce up to 150. But you can see this is 20-30 years of data, how this level it's to maintaining an upward trend in a market, and this sort of gives a long-term view. And then if we swap back to our short-term chart, you can see that how this was so crucial to hold during November, December, and how it's found a bounce off this 140 and gone back up. So as always, we'll let the market show us the way, and we'll keep an eye on it. But say, bear on the edge of caution at the moment for another revisit down to 144. But obviously, if we break this 200-day moving average and hold over it for 2 weeks, then we could look for fireworks to the upside. And I'll put an update this time next week. Thank you for watching.